All right, I want to show you this price action today and how to trade it. Got a prophetic word this morning. It's April 15th. Got a prophetic word from Apostle Mark this morning, and it said today is going to be, he had a dream about a monkey out of the cage. And so I'm going to call this trade monkey out of the cage to show you what that kind of visual looks like in the market. This is not my normal trading strategy. I traded a 3M advanced strategy, and today I didn't see it, but I did see this come up, and so I want to show it to you. I'm going to use the replay button and go back to 8:30 when the market opened up and show you exactly. And it would probably help you if I share my screen, right? Let me share my screen. Hold on, bear with me. Here we go. All right, sharing my screen. All right. All right, so we're on the screen. It's April 15th. I'm going to use the replay button to go back to 8:30 when we were on the live call this morning. And I said we identified where the overnight highs were. That's the Asian high right here. I'm going to mark it with this line. That's session high from the overnights. And then I'm going to mark out session low, which is right here. Session low for the overnights. And we said what we were looking for was for for New York session to open up and to take out either the high or the low. We call that liquidity, a rate on liquidity. And we just wanted to see price um, run up here and take out this liquidity above the open and then run further down, or run to the bottom, take out the lows from the bottom and run high. And we, normally with the 3M strategy, if it's there, we're satisfied with having the market open up and just catching this move, right? And then getting out of the trade. We're retesting the high. But there is oftentimes what happens is we'll catch this move and it'll grab liquidity, and then the move down is a lot longer, or vice versa. We'll catch this move down, but the move up is a lot further. And so that's a rate of liquidity before it makes its bigger move. It wants to grab liquidity above the overnights and then run down, or vice versa, grab liquidity on the lows of the overnight and then run up. So that's what we were looking for today. And I just want to show you this price action at New York Open, how price ran up. So price ran up and above these overnights. So we have what we were looking for. This is the overnight high, and New York went and grabbed that liquidity above the overnight high. And so what we were looking for as confirmation is a fair value gap. And I want to show you what that looks like really quickly. Fair value gap is when it's a 3-candle pattern. So here's candle 1, and let's just say I'm looking for the sale. And then candle 2 will open up, and it'll have a lot of momentum to the downside or to the upside if we're going to the upside. And then candle 3 will open up and close wherever. All right, so this is candle 1, this is candle 2, and this is candle 3. All right. All right, looks beautiful. All right, candle 1, 2, and 3. The gap between 1 and 3 is what we call the fair value gap. So that's candle 1, here's candle 3. The gap in between here is called a fair value gap. And what we look for is for price to push back up into that fair value gap, and we place the stop above it, and then we catch the sell down. So I want to show you what that looks like on today's price action. All right, so we're looking for the sell, and let's let this play. All right, so right there, we had the momentum candle. The candle before that is candle 1. Let me get rid of that. All right, that's candle 1. The momentum candle is candle 2. And then the third candle is candle 3. All right. And so we want the space in between that gap. We're going to identify that as a fair value gap. So we go the bottom wick of candle 1 and the top wick of candle 3. We're going to call that, I'm on the 5 minutes, so I'm going to call that a 5-minute fair value gap. All right. So we have the 5-minute fair value gap. And what we're looking for to validate this entry is we're looking for price to push back up into this and stay beneath it in order to enter into sale opportunities. All right, and so let's let this play. All right, so right there, price pushed back into it, right? And let me go back a little bit. Didn't want to show everything. Let me go back here, there. All right, and so what we do when price pushes back into that fair value gap is I want to take a short position, right? Right where that lives, and pull the stop loss just a little bit above the fair value gap. And then what we're going to be looking for is a 1 to 2. So 1 to 2 is right there. All right. And so let's let that play out. All right. All right. Stop it right there. So price, this is monkey out the cage. We're going to call this move because it's a lot of choppiness. Normally with my strategy, we wouldn't really trade this consolidation piece. And so, but we knew what we were looking for. We were looking for price to push up into the fair value gap and price to go lower. And so when it pushed up into the fair value gap with the stop loss extended above it, you can see that there was a few wicks that couldn't close above the fair value gap. And that was the indication that price is going to go the opposite direction down to where we want it. We look for a 1 to 2. We got the 1 to 2. That was an interesting play. I'm calling that monkey out the cage, the run up to fair value. Once, once the raid on liquidity above the overnights have hit, it produces this momentum candle. This is the fair value gap. You mark the fair value gap, so price will push back into that, stay lower, and then monkey out the cage. Here's the cage. Price is just bouncing back and forth, and then it springs free. But when it sprung free, what I noticed is a second momentum candle right here. And I said, well, let me get back into this trade again, because you have a momentum candle. Here's candle 1, here's candle 2, here's candle 2, and then here's candle 3. We just put the box in between that fair value gap, in between right there. And we're going to wait for price to push back into now this fair value gap. And now we don't have to be extended above. We just want to be above the second fair value gap. And so we're going to enter in, and this is black line is my VWAP, my session anchor VWAP. I'm going to put my box just a little bit, my stop loss just a little bit above that. And then we're just going to look for another 1 to 2. All right. And actually, this has already taken place, actually. So when price pushed down, this candle up here pushed into that fair value. So that's actually where I took it, right off of V1, right there. And then pulled that above, and then just look for my 1 to 2. And so, and that played out. And yeah, this is current price action right now. So this is where price action is right now. Price pushed back up into that second fair value gap, and stayed lower, and it just hit take profit. Just hit take profit. So this is in real time right here. Just hitting take profit now. So that's a way that the initial trade actually went almost 1 to 3. But I'm calling this monkey out the cage. This is the cage. It goes back and forth, then it breaks out and runs down. And my expectation by the end of the day is that we'll create a new low. Um, it was a rate of liquidity up above the overnights, and now we're going to run to create the new low. So for those that were looking for the the um, the buy up, um, when you look for the buy up, a lot of times that's the shorter move. That's just the run up to liquidity there. But the buy down is a lot bigger. And so if you get good at seeing how price action moves, you can get caught up into the shorter move, or you can use the strategy to catch the longer move there. So just wanted to show everybody that monkey out of the cage. It's that we're not changing our strategy, but we're enhancing the strategy that we're currently using, just to finding those liquidity zones in the market. Hope this helps. Hope you're able to follow and track the logic there, but go back and study it, see if you can find it, back test it, see how many times you can find that happening in the market. All right, y'all, talk to you later.